Welcome back, everyone. My name is Adam. Rusmin.
Hello.
Victor.
Hi, everyone.
Thanks for joining us today. We want to talk about how you can deal with your emotions in the stock market.
Yep.
Because I think this is the key ingredient when it comes to getting good at investing. Because the thing is, you can actually invest in the best stock.
Yeah.
But if your emotions lead you to make the wrong decisions, because the stock is not going to just stay like that, right?
Yep.
It's going to go up, it's going to go down. You can buy the best stock in the world. Yeah. But if your emotions just get carried away, you're going to lose money.
Yep.
You're going to lose money. So this is a key thing, and I think we want to cover this. And we want to pull out this chart that has been around for many, many years. Some of you may recognize it. It's basically a chart of the prices going all the way up and prices coming all the way down. And along the way, as prices keep going up, you go through different emotions like optimism, belief, thrill, euphoria. And then you might think that this is going to last forever.
Yeah.
Right?
Yeah.
And then suddenly something happens, or the stock hits some bad news, and then it starts to go the other way around. And then you start getting anxious. So there's anxiety, denial, panic, capitulation, and anger. So all these emotions will come into play when you actually have real money in the market. All right, so we're going to talk about how do you actually deal with these emotions, because for the both of you, like all of us have been investing for many, many years. We weren't always cool when it comes to investing in the stock market, right? Your emotions kind of like get in the way. So we're going to ask the two of you, because you guys are in the market a lot. How do you feel at the very start when you started investing, when prices went up and down? And how do you deal with it now? And what makes you successful when markets can be very, very turbulent? All right, so why don't we start with how did you deal when in your early years when you're investing? How did you deal with it when stock prices went up?
At that time, I was still learning how to invest. Right? So I'm someone who was like, I like to learn more about this particular subject before I go into it. Okay, so I didn't really put real money until like in 2010. Okay, so I've gone to see through the cycle. At the time, we saw like some fund managers, even like value fund. The time of value investing when we first started, it was very popular because of Warren Buffett and how successful he has been, right, throughout the years. And then 2009, you saw some of this value fund really crash like 80%, 90%. Just imagine having 1 million in the market, and then all of a sudden it become like worth $200,000. Right, so that was the time where you hear people, some of the funds will close down. And then some people really like bankrupt, right? So it was quite scary, but I didn't really feel it that much because I didn't have much money.
You didn't have skin in the game, right?
Yeah, so I kind of like escaped that. My earliest one was actually in 2011 when there were Euro debt crisis. Okay. Right, that was the time I still remember. We were just started to manage the fund. Right. And then when we got into the fund, we saw the portfolio was all in red. Right, and so. And then at the time when we read the news, right, people were saying that, there's going to be a double dip because we just gone through 2009 came out, and then now 2011 euro debt, the Greece might default on the debt, and there's going to be a W-shaped recovery, which means that the worst is yet to come. Okay. Right. So we might go into the huge deep recession. So at the time when I was like, look at the fund, was like I was so scared because everything was direct. And I look at my portfolio also all red because I started to deploy, and then most of them started to fall. Right, and I was a bit scared. And we started to, I think, slow down some of the position, right? And then we rotate to some of the better companies at that time. But I wasn't also even convinced that should I like even buy even more at that time, even though the prices were still very attractive, the valuation very attractive.
We only nibble into the market.
Okay,
very small amount.
Because this is kind of your first foray into investing at that point in time, so you weren't sure how low the market could go.
And if it's going to be another 2009, then the prices that we go in today, it's going to be a lot lower. So I should not be even like going in now. And that was like kind of question that I started to have, right? And then I even have friends, I still remember, I think Peter may probably recall that he came and told me that he exited all his position because the worst is yet to come. And they say that it's going to be another 2009 scenario. Right. So I was very scared. So and then we stay invested, because if you read fundamental investing, value investing, right, they always tell you that to stay invested. Make sure you invest in strong companies. Right, go through the down cycle, and we just stay invested. Then after that, quickly the market started to turn, and then I remember that was in somewhere also second quarter of 2012. That was when another second round of Euro debt crisis, the fear came in. And then the market went back to quite low at that time. Right? That's the time when we started to buying I told myself, I shouldn't be missing out this another mini crisis. I'll call it mini crisis because it wasn't as bad, and we don't know whether it's going to turn into a major crisis every time when we are in the mini crisis. And that's the problem investing, because you're dealing with the uncertainties. So I personally started to invest even more money at the time, even though I was like very scared. And every time when you start to hear news, people will be saying like, the economists say that this year we might have crash. Things like that. Yeah, so I was quite scared.
So this is when so you actually got in at a good time. You invested at a really good time because prices were low, and you kept calm. So somehow you knew what to do. But for someone who's new, like they've never gone through a crash before, like, and they're like just like scared, shitless, whatever it is. How would you feel? Like, how would you handle something like that? Did you go through something like that? Was there any experience recently where, you just felt anxious about the whole thing?
It's exactly like how I've been through the 0809.
Yeah.
So during the 0809, I already start reading some investing books, and I know that I have to invest in the market. But during the 0809, I just keep seeing the share price keep crashing and crashing and crashing.
Yeah.
So I was telling myself, when is the time to go in? And I just want to buy the index,
Yeah.
And I just keep look. The next day I look, crash again.
Yeah.
Next day I look, keep crashing. I was thinking, oh my god, when should I go in? So I was very blurred, and in the end I just missed out the whole 0809.
Okay.
Right. So I start to read more and realize that actually if you want to do investing, right, you must always believe that the market will recover. If you don't have this belief that the market will always recover, right, then buying at a crash will make it very painful for you. And buying at a crash is not like I say, if you get a bit more savvy, right, you will tend to be more excited during the market crash.
Yeah.
And when the market crash, you go in a lot on the first tranche, and after that the market keep crashing, because the market don't crash and stop and go up, right? It always crash and crash and crash. So I think it's good if you can to stabilize your emotion, right? You buy in tranches is the first thing, and you goes by the percentage decrease from the previous price, right?
Okay.
Yeah. But I think generally, of course, during 2010 when I first started buying, and I bought quite a few companies, right? Mostly in Singapore at the time, and then they all mostly went up. So I kind of feel like quite confident. I'm quite good at investing, you know? Because when you are in the up market, generally you feel that your optimism might get carried away, right? And then 2011, that was a real test start to comes in, and that was just a mini crisis.
Okay.
And 2012, I kind of saw what happened to me in 2011. Then I told myself, every time when people are very scared, Warren Buffett always said that be fearful when others are greedy, be greedy when others are fearful. And that was the term that I always okay, it's easier said than done. 2012 was a time where I really better go in even more heavier. So that was a second window of opportunity for me to really cut in. Right, and I even bought even more share. I put in more money, whatever saving that I have, I continue to invest. Okay, so after that, I think 2012 to 2014, I think even towards 2011 to 2012, there was like a lot of people say that the end of Mayan calendar, right? End of the world, the market will crash or whichever nonsense. So sometimes you hear this kind of news around the stock market, right? So a lot of time is nonsense, but some people really believe into it. Okay, so you should not be like exiting a portfolio because someone says it's going to be end of the world, right? Better cash out and stuff like that. Okay, and until 2014, I remember have friends flying into, or 2015, flying to China, and they were saying that he took cab in China, and then he saw the taxi driver with like so many screen of stock market, because at the time the stock market was running up very quickly, and it was very easy to make money in the stock market. Even the farmer that I read the news, right, they sold the whole farm and then put all the money into the stock market.
You started in 2010, and then you invested when it was a low, and then now the prices have gone all the way the other way around. And now in your experience in 2015, especially in the Chinese market,
which we were already exposed into the Hong Kong market.
And then now everything was like euphoric.
So then I saw another cycle that was like in the up cycle, and then you really get to see and read news. Sometimes even hear your friends like they were like investing a lot of money in the stock market, and so stock market is the way to go, right? Because they make so much money out of it. And I think towards the second half of 2015, the market started to crash, and that's where people started losing their head again. Right? So another down cycle came. And then you read the news, right? And then there will be interviews where people, how much money they have lost. They tell themselves they would never enter the stock market again. And there was a time where I got excited again, right? And I still remember that time. I think we already have like this dividend machine, right? And I told the members, right, this is one of the best time to invest in Hong Kong, China, right? And we went in again, and we bought quite a number of stock. And then 2015 to 2018 or late 2018, that was where something happened in US, right? Trade war. I remember there was a panic, and that was the time where we started to enter the US more aggressively. I think along the way you see a lot up and downs, right? And then after the market 2018 run up continued all the way to 2020 until COVID came.
Yeah.
And that was the moment I think most of us could remember the most, and that was also the time when we were more active on the YouTube roundtable. And when the COVID crash came, it was one of the busiest moments, right?
Yeah, I remember.
And compact in a very short period of time.
I mean, it did. Yeah, it was a very busy time.
Because usually crash of 30% is usually over a period of 1 2 years.
2 years.
Or a few months to 2 years, right?
Yeah.
But this one all happens in 1 month.
1-2 months. So, and at the time, I remember every stock you buy, it crashed 15%, circuit breaker hit. Right? Then the next day you buy USD stock.
I mean, that's also the first time I experienced circuit breaker.
In the stock market and in real life as well. In Singapore used the circuit breaker.
We were very excited, I remember, right? At the time. But when you read the news, because in the US market, there were like jobless claims hitting all-time high, record high. Right? Never in the history where so many jobs were lost in one single moment in that COVID crisis. And people were losing jobs, people were literally dying, okay? And when you read some of the news at the time, I still remember I was sharing some of our members, you look at the professional investor, Bill Ackman, right? Those of you who invest in the US, you have heard of this name. He said the hell is coming. When you hear terms like that, naturally you feel scared. Why would you want to put money in the stock market when the hell is coming? Worse is yet to come, right? So that was one of the moments where if you didn't take any action, then obviously you'll be freaked out.
Okay.
So I think we were kind of like quite prepared. All right. So when you invest, you don't invest with the mindset where the market will only go up.
Okay.
The stock market doesn't work that way. All right. Even like you said, give you the best company. You have to ride through the cycle. So sometimes the best stock can even crash like 80%, and you have to be prepared for it.
But it sounds like you've already like got a handle of like all the crashes that come, all the crises that come. You're like cool with it. But how did you get to that point where anytime there's a crash, you're like, hey, this is time to buy? How did you, go from if someone's watching this and then how does someone go from like, I'm so anxious, I'm so scared, what's gonna happen, and become something like, you know what, it's an opportunity to buy? How do you make the emotional shift?
I think you have to go through the down cycle.
Okay.
Right. I think all of us learn through every cycles, right? I always reflect on the different cycles that I've been through and ask myself like, what did I did right and what did I did wrong, so that I collect all on the different cycles and I make sure that the next cycles I will do it much better than the previous cycle, right? So in my initial years, when it was down, right, I didn't go in very aggressively. I was like afraid, so it's like bit by bit, don't dare a lot, right? But after that, when we see our portfolio just turn, right, and things just turn out well, right, then you say, oh, I should have put more. That's the typical hindsight bias, right? So then came in a way where we did put more, but we put too early. Not really too early, it's crash, but the market just keep going down. Then you have minimum bullets on the bottom, right? So that I also learned a lesson. So when it comes to, I think, the COVID case, we are more well prepared actually. The COVID was, I think we are both of us is the most well prepared. After so many years of crash and boom, I think the COVID, we are the most logical, most well prepared crash we ever happened to us, right? Because we are so logical in terms of looking at the valuation, and we already set price targets. So as it goes down, we just keep averaging based on the certain systematic way to do it. Right. And I think it works very well for us.
But at the time, again, it looks like a silly move because a lot of people are dying. All right. What makes you so sure that the COVID will be under control? We don't know. We didn't know at the time. Right. COVID was the early wave, and then I have the circuit breaker. You have to stay home. And all of a sudden, like a lot of people like started to become interested in investing, and then the brokerage account new opening hit record high, and then suddenly a lot of people go into the meme stocks, and the valuation of some of the meme stock went all sky high.
And all those like loss-making companies.
Yeah, and they were suddenly all of a sudden, like 2021, I still remember there were a lot of people were punting in the stock market instead. Right, so people who Gen Z, they call it at the time, they didn't have really much investing experience, and all of a sudden people saw that 2020 to 2021 was the time where the market really gone up so much.
Like Zoom,
especially the
Peloton, these kind of companies.
Peloton, now you recall some of those companies. The growth stocks, right? That was the moment where, some of them can like 10x in like 1 year.
And our stock just double up only. The rest are like triple up and just or 5 times or 10 times and all this, right? And I can remember, and I look at the social medias, everybody is saying, I'm making this amount in the stock market. It's so easy. It's once in a lifetime. Then suddenly, there's record opening of brokerage account. When I go to the broker to settle certain things at the point of time, at the point of time still don't have a lot of internet brokers, but they already have already. I went to Maybank and I saw the queue for the brokerage opening is so long.
Okay.
At the brokerage, this is the first time I'm seeing it. Everybody's opening. So all the brokers is having record opening of brokerage, and people are going into the US market and purchasing. Then suddenly a lot of my friends that have not been doing investing start talking about investing, and talk about like they are very expert, and because they make 3 times, 4 times, 5 times, they buy this like loss making companies, they make 5 times, they buy this, they go up 10 times, right? And it's really crazy. Then people have like Bitcoins also going up at the point of time. So suddenly everybody become rich, and I can feel everybody's like feel on top of the world, man. Then suddenly you go to the YouTube channel, everybody is talking about investing. Right?
Everybody become an expert.
Yeah. Suddenly the YouTube channel, there's multiple people.
I just want to make sure state that we are not experts.
We still have a lot of things.
We are just sharing our experiences. We are not experts. Please do not take our what we say as
just take it a pinch of salt.
Not the gospel truth. We're just sharing our experiences.
So correct. And I still remember at that time, some of my friends who do those fundamental investing, value investing, right? They give up their strategy.
Okay.
Then now they have become a growth investor. Right? We are also a growth investor in a way, right? But some of those investors, I think because of that 2021, I think a lot of stocks, even with no fundamentals, started to like gone up so much. It becomes a place where people might as well just switch to that.
So how do you handle that? I mean, when prices go up and everything's so excited, and then you say people are making 10 times and you're only making 2 times,
3 times.
Do you feel FOMO? How do you handle emotions like that?
I mean, at the end of the day, I'm still making money, right?
Okay.
For us, our safeguard is we always invest in profitable companies,
quality companies,
profitable companies, pay at reasonable price.
Right.
And the thing about strategy is, right, you want to be like let's say a growth investor. You are betting for the next moonshot. Okay, right? Or I call these people the moonshot investor. Or you are doing like us like that, what we call quality investing. That means we're looking for quality companies, buying at reasonable price,
and invest them in the long term.
And hold it for long term, right? You can do these 2 strategy, but don't mix the 2 strategy together. Right, because you are taking a lot of moonshots. Right? A lot of companies you take are non-profitable. Right? If you size it properly on like 1%, and you have 50 or 100 of them, just need 10% of them to do extremely well. You can cover all your losses, right? But if we were to do our style, we are more concentrated investors. Like we only own like 10 to maybe max 20 stocks or this, right? To concentrate on something that is moonshot that you cannot predict, right? Because a lot of time when you buy the moonshot, you are assuming that or thinking that, hoping that this will be future. But what we do is we are investing in companies that already have a track record. It's just that somehow because of the crisis, they fall below the value. Right? But we know that because the business is recurring, eventually you'll go back to the original value, right? And go back to the original earnings, and we will just get back.
So you didn't feel any FOMO?
No.
Okay.
Yeah, because I think the past few crises already taught us a lot of like how we feel, because we have gone with the market before, and we've been humbled by the market also, right? We thought that we did very well also. Then we start to get a bit more aggressive investing, but lucky at the early years our capital are lower, right? So that teach us a lesson, when we move forward. So in the end, and also it pays very well, right? If you start to read about history. So Rusmin and I, we read this book called The Bull. I mean, it's a very good book that talks about the history of the US stock market, right? But it's a very dry book. Okay, if you don't like reading, I think you can just skip that book. Okay, so that book talks about the history of the dot-com bubble, right? So I've read through how the emotions and how they interview people during the bull and interview people after the crash. Yeah. And you can see the different emotions and all this. So we learn from the history and we assume that it is the same as that.
Okay, so the book basically kind of tell you that, okay, in the different market cycle, the market cycle will happen up and down, but the characters that are into their cycles changes from time to time. Okay. Right? Always in the next cycle, you have a new player coming in, then they were like first time experiencing this, then they will create that bottom and the top. Right? Okay. Yeah, so that kind of like the gist of it. So human emotion just...
So you're saying there's always something new to get excited about.
Yeah. Yes.
So it's like .com and then now it's AI and you think that it's probably going to go on for a long time, even though I mean AI companies now, a lot of them are very profitable as well.
I mean all those .com ones, they are profitable now, right?
Some of them will not.
But it takes time for it to go, because sometimes the hype can just go up. So talking about those companies that loss making, that went up 5 times, 10 times and all this, most of them, not all, right, they went down 90% after that. Until now they have not recovered to the previous peak. Right, like companies like, I think maybe like Lemonade and all this, it's loss making, and Snap also, they went up and just didn't go back.
So that was in 2021. I remember that. Okay, so it's actually very important to stick. The lesson that I learned is stick to the strategy that you
fits you and your emotion.
You don't change the strategy because it's not working in that 1 year, because not all strategy will work every year. Some strategy will have a downturn. Right, so it's very important to stay true to your strategy, provided the strategy is fundamentally sound.
On top of what Rusmi has just said, right, the strategy don't work every year. That is true, because if the strategy works every year, right, then the market is efficient already. Right? It don't make sense. Precisely, it didn't work every year. People don't believe in it. That's where you take advantage of it. Right?
Then entering to 2022, I still remember the market was started to crash. Right? A lot of US stock, those growth stock that have gone out like 5-fold, 10-fold, all crashed like 90%. Now I tell you that crash is 80-90%. But if you've gone through that journey where you start to see the prices coming down, sometimes in one day can dip 20-30%. It can be really scary if you invest in some of those companies right before the crash. And I still remember that a lot of suddenly you don't really see people posting how much money they make. Right? So some of these investors, they might, I won't call them investors because they are like really coming ready to punt. And you don't see them anymore. Right? They don't talk about it because it's in the down market. People generally usually not happy when they see losses, and then they exit. They don't talk about it and they move on. Right? So that's why I don't call them investor. And at that time, I remember that 2022, and we saw a lot of the US tech that we own. Even though we bought during COVID, some of them came back to the price where we bought. I mean, most of them have gone up. It's still below, above our cost price, right? And we stay convicted, and then we told our members, right, hey, this is one of the best time to look at US tech. Okay, the valuation is reaching very attractive.
Profitable US tech.
Profitable US tech. Those are high quality one. And I still remember the time when I read the news, but it was also a moment where if you want to enter the market at that time, when everything is crashing down, I still remember NASDAQ or crashed about 35%. It's very scary, right? For at that point of time. And when you read the news, sometimes some chief investment officer, right, talk about the global stocks have further to fall despite the recent sell-off. Right, and this is a very prominent institutional investors in Singapore. Okay, I don't want to name who, but I think this is not the only time that you will see it. You hear it in every down cycle, right? Especially the time when the market is crashing, then you will hear experts saying that even the economists were forecasting that there's high 100% chance of US recession.
100%.
Yeah. Okay. That was in late 2022. I still remember. When the market is just like crashing, a lot of stock were losing money. And usually when you hear news like that will be the bottom.
Okay.
That's what we have learned. Right. It repeats. Every time you repeat.
It's not only in the US market. It's in the China market. It's also the same thing. Or the Hong Kong market, where I think one analyst came out and said that the China market is uninvestable. That was the bottom. that was the bottom.
Yeah.
Right? So every time you look out for all these signals, you know.
Yeah, then you hear like Goldman Sachs, right, raises the US recession probability to 35%. Morgan Stanley, the S&P could drop 26%. This was the article that I was reading at that time.
Yeah.
Right, in early 2023, and then you were like also very questioning whether, hey, who am I? You know, I'm just a small-time investor, and this guy are institutional investor. They are the pro, right? And they've been in the market. They like full-time in this. When they say the crash is coming, who am I? And especially if you are new to investing, who am I to question their authority or their expert or legal on this, right? So sometimes that's something that I want to tell you, that when you start to hear news like that, when people are not getting out of the market, that's the time to invest.
Okay.
Right. So that's what, back to what Warren Buffett said, be greedy when others are fearful.
Okay.
And it's so true. Every down cycle, up cycle, I come back to what Warren Buffett quote is saying. It's like so simple. But every time when the down cycle really come out, do you dare to go against the crowd? Yeah, that's like always my thought. And this is like the best quote that Warren Buffett ever produced.
Okay, so let's bring it back to now, because I think now we've gone through like a timeline of the two of you, how you've invested over the last 10-15 years, all the different ups and downs. Basically, when you came to all the crises, you guys basically kept a calm head, invested at the low prices, and you didn't. I mean, you used to rush in, and now you didn't rush in during COVID. Yeah. And then when prices go the other way, you guys didn't carry it away. You didn't switch strategies to something else, trying to get more returns when you just stuck to what you knew, and that worked. So let's bring it back to today. Now the US market seems to be just keeps going up, right? Yeah. So how would you, someone who's looking at this like, wow, I'm making so much money with Nvidia or whatever company you invested in, how do you not get carried away with what's happening now? How would you react now? How would you do it?
You should focus on the valuation.
Okay.
Focus on the valuation to guide you, but not your emotions to guide you.
Okay.
Right. We do trim position if
the markets get
not the market, but the stock itself hits the expensive valuation. So you need to know how to value stocks.
So valuations over emotions.
Yes, correct. And based on that, we trim our position, right? Like if you have watched our early videos where I think in the early few months of 2025 before the crash happens, we actually say that we trim our Alphabet and our IBKR stocks, right? Yeah. Because that was on the high side. In terms of valuation. So we trim some position and the market start to crash on after that, right? So we got in and upstick on some of the companies because the Trump creates an opportunity back, I think around April or something like that.
Tariffs,
right? And now the markets are right up again, and their valuation is back up to 1 SD above for the S&P 500. Okay. So now we are back to the high valuation now, right? It's just that we know that we need to be cautious moving forward, but the thing about bull market is sometimes it can last a long time. You don't want to be out of the market, right? Investing, the good thing about investing is you don't need to be, it's not like property, you know, either you buy this property or don't buy this property, right? Investing is you can still own the stock, but you can trim the stock, but you still own it, right? So I think that is a good way. I mean, things get a bit more expensive, you just keep trimming. As it get expensive, you trim. It's back to the same story in the book bull, right? Back in 94, 95, the valuation is very high. A lot of value investors already cleared their position 100%, waiting for the next crash, right? Because it was very high valuation. But the US market ran from 95 all the way to 1999, right? All these value investors missed out, and a lot of their clients start to complain about them, say that why are you out of the market? You should have bought, right? In the end, they give up. And they believe their client, and they went to buy into the tech company, and the crash came. But it's written in the book. You can read the book. It's very interesting, really. Right. So in the end, I mean, we don't manage other people's money, but we manage our own money, right? We are responsible for your own self, right? Yeah. You don't need to care what other people think, but you let the valuation guide you. But you trim your position as it gets expensive. It's either you have more cash or less cash. That's all.
Okay.
Right. But always in the market.
All right. Yeah. So maybe to wrap this up, I think, are there any simple tips that anyone who's watching this, they're new, maybe they haven't gone through so many cycles? I think going through many cycles really helps someone get, they get used to ups and downs. Oh yeah, actually in the end, everything seems to go back to normal. Eventually, you get used to it. But someone who's new, what are the simple tips you can share with them if they're right now the US market is so high. What would you do? I think it's more of an emotional thing. What kind of tips can you share with them?
I think for new investors or beginners, if you're entering the market, welcome to the stock market, right? It's going to be a volatile rides, okay? So I think if you are going to invest in the stock market, first thing you need to tell yourself that you have to be prepared that your money could drop 50% one day.
Oof.
Yeah, go into this mentality.
Yeah.
Okay, because stock market is volatile.
50%.
50%.
Yep.
Okay. It could be more.
Yeah.
It could be less. Right. Depending on the next cycle, but definitely we're going to see another 50% kind of correction. Right. So when you have that mentality, at least you're prepared that okay, when the crisis come, right? If you have spare cash, if you have more cash, that's why we always advocate, having additional 20% of your portfolio in the form of cash. When crises like this happen, that's the time where you should be buying more on those companies that you like. Okay, and right throughout the cycle. Right, and along the journey, you're gonna hear a lot of news, nonsense news. Right, news that I think are very valid, but sometimes I look at it is useless because
the sky is falling kind of thing.
The sky is falling. Don't catch a falling knife. The end of the world is here. The worst is yet to come. I think those are the period where it is going to be very difficult for investors to actually invest for a long term because they trick your mind, right? They scare you, right? And once you get caught in that down cycle, because you look at portfolio losing money and people are telling that the market is going to crash even more, you might exit. And that time when you exit is a time where you're going to
look back and say, oh, I should have bought more.
You should have bought more. Yeah. Or it could be like out in the market forever.
Yeah.
Right. Okay. So stay invested, right, during the down cycle. Tune out the news, the noise, right? So sometimes even though it can be like very solid, reputable bank company, they say that you should be out of the market now, okay, because the worst is yet to come. Things like that. Okay. Even like China, as you remember, 2022, 2023, people were saying China is uninvestable.
Trash can.
It's a trash can.
Everything in a trash can.
Even the Chinese are not investing in the China stock.
Yeah.
Right. At the time, there was a news in 2023. And that was the moment we say, this is the moment. All right. But when we say this is the moment, we also scared. Because every time when I locked in my Chinese stock, it was some of them was down like 50%, 60%. Yeah. Would you still dare to put in more money in those stocks?
So you were scared?
At that time. But I wasn't scared. But when you have so much money, then you see down 50%. Now you still want to put in more money. Sometimes you still have a little scared. I'm still human. Because I'm betting on something that is losing money. Even the Chinese investors are not investing in the stock market. That's where the Warren Buffett quote comes in again. Be greedy when others are fearful.
So we are bearing the fruits now, the Chinese market.
So the Chinese market now has been running up. Even at that time, people who believe in Chinese market also give up. I have some investor who they exited Chinese market completely because it's like a 4 consecutive down year. I usually like to call it depression, right? Because it's so bad, right? And most people usually won't last through 2 to 3 years of down cycles. The COVID was exceptional. So people who gone through that COVID crisis in 6 months, the whole cycle I think lasted the deep to full recovery with about 6 months. That's a fake down cycle. Yeah. It's a fake one. Yeah. Because you never tasted the years of down cycle for years, that's where you start to feel the pain. Yeah. Okay. So those periods where US have gone through the depression in the 1920s, right? Those were one of the toughest period. I
mean, we can't talk about that. We weren't around.
Yeah, we weren't around. Yes, yeah. And then China, I think we sort of like a bit of taste of that. Okay. Depression period is really like very difficult to invest in stock.
Okay. Yeah. What about you, Victor?
So I think right now, if you see, we are more on the higher side, but I think we haven't hit the euphoria part yet, right? Okay. So to me, is investing right now in such current climate is to be more cautious, right? Save up more money, right? If I'm not saying that there's no opportunity in current market. There's always opportunity in every market. It's just that it's whether there's a lot idea or less idea, right? You still can invest during such scenario, but just that be more cautious in deploying. No need to be too aggressive. Can be just conservatively moderate deploying if you want to, right? So let's say if example there's 100% is cash and you really want to be in the market, you don't want to lose out, right? Usually I tell people maybe 10-20% at this current climate, right? But you should get more aggressive when the market start to crash, right? So like what Wismin say, all this like people saying that the worst is coming and all this, instead of treating it as a fear, you program your brain to think it as a buying signal, right? Every time you see such, okay, first trench, then after that, maybe a few months later, you see again, oh, the market is worse. Like, get out of the market right now. Second trench, right? It's exactly like you looking at a Labubu selling for $100, but now the Labubu is selling for you at $20. You want to buy or not? But you already know it can be sold for $100, you know. But it drops to $20 because of certain events, right? If you can see past the event, you can see on maybe a 5 years, 10 years down the road, a long-term horizon that the business can recover, right? It's still recurring. Like example, you have your SBS Transit, right? Let's say the SBS share price crash. Do they still make the same amount of money? Yes, what? Right. Every day you still have to take your bus. You have to take the downtown line, the northeast line. They still make the same money, but the share price just crash. So it does not make sense, what? But they're still making the same amount of money. But you just that you can buy
at a discount.
SBS at a discount. Your Labubu at a discount. Right. Yeah. So every time when the crash comes, just think of Labubu, man. Right, $100 now $30.
Okay. I beg to differ. If the stock is the Labubu, I wouldn't buy.
No, I just take it as a simple analogy.
No, Victor likes Labubu.
I'm not into Labubu, but I just use it as because everybody's so into Labubu now.
I think this is the only thing. There are a few things that of course you need to be prepared, right, in the down cycle, because up cycle is very easy to invest, right, because anything that you put, most of them will go up. Down cycle is the one that's hardest, right? And if you could take every time you see the opportunity to buy even more during the down cycle, there's a time where you know at least what you're doing. So having extra cash is always good. Okay, and of course don't invest based on margin, right? Or invest or leverage to invest, because market is so volatile, right? If you ever invest based on your leverage, right, then you might get wiped out. Once you get wiped out, means you are zero.
So you don't even do that. You want to stay in the game.
Yes, you want to stay in the game.
All right.
Right, and of course, on a personal level, obviously you need to be very well prepared, right? So sometimes even during the down crisis, there's a time where people get laid off. That's why you have the emergency cash that you set aside that helps you to tide through the down cycle. So hopefully, not during crisis, none of us get retrenched. That's the ideal scenario.
Okay. All right. So I think we wanted to share this because we talk a lot about the technical aspects of investing, which is like what's the best stock, what's the competitive advantages, what are the risks and stuff like that. But actually all of it boils down to your decisions that you make in the stock market. And a lot of times your decisions can be skewed by your emotions, which you don't want to do. So you want to have your valuations over your emotions. And like I said, if you can technically buy the best stock in the world, but if you make the wrong decisions when it comes to emotions, you can still lose money. All right. So maybe one more tip I can share with you is that if you like what Risman and Victor are saying, you can follow us on YouTube, subscribe to our channel, because we will tell you when we think
when there's a crisis.
There's a crisis, or when things are expensive. But again, we're not making any predictions. We just say it as it is at that particular point in time. So we're not making any predictions. I think
we have done roundtable, started in 2020 COVID. Right? So that was the time when we highlighted the opportunities on some of the banks. And I think 2022, and of course the recent trade war. Right. And then of course the China, I think we did a few rounds of roundtable, and it was still down until now. It's going up, which is good. Okay. So again, do follow us. Right? If you want to, don't want to lose your head.
just to keep calm, right? Keep calm, that's all. All right. So I think that's it. We wanted to share all this with you. If you have any questions about it, please put them in the comment section. If you like this roundtable, please hit the like button, and of course subscribe, so you know what's up in the markets next time when the crisis comes along or something really gets too expensive. All right. So with that, thank you so much. My name is Adam, Rusmin, Victor. Thanks for watching us, and we'll see you again.